Welcome. This is the January 28th episode of the Trading Pit, where we break down the Bitcoin and crypto markets with human and AI insights. I am your host, Marconi White, and in part one of today's show, Benjamin and Amit join me to answer which Trump pushing, let me say that again. With Trump pushing the Made in USA, how should traders approach trading US tokens? Is this pullback a setup for Bitcoin, ETH, and Solana trades? And then in part two, Ben Lilly's back with his next iteration of the flow report, looking at Ethereum, Solana, and Bitcoin, saying, hey, has the supply and demand, have they picked up? Are things looking stronger, or are things going to start getting weaker as we head into the rest of Q1? But today we're going to kick it off with our second edition of the Trader Roundtable, where I ask these guys to go deep on questions every trader wants to answer. And today's topic, as I already mentioned, is how to approach trading an emerging narrative. In this case, it's the Made in the USA tokens. We want to think about this from a trader's point of view, where they're saying, hey, I'm hearing about something brand new. In this case, it's Made in USA tokens. What should I do? Should I just go out there and start buying these to be early? Should I be thinking more and learning about the narrative? Should I evaluate other aspects of it? That's what we're going to get into right now. So let's kick it off. But before we do that, I want to do something we haven't actually done too much of. We've always brought you guys up here, Benjamin as the whale hunter, Amit as the range sniper, really showing off some of your some of the more skills that we see. But I really want to hear more from you guys, a little bit more of your background. We can give everyone a little bit more of your background. So Benjamin, I'll start with you. Can you just give a recap of kind of your background, what brought you here?
Hey, this is Benjamin here. In short, I've been designing and implementing automated trading systems for Forex and crypto since 2015. Some of those systems have been able to capacitate over 200 million in capital at its peak. And glad to be here.
All right. Excellent. Amit, what about you?
My name is Amit, and I've been trading crypto successfully for last 5 years. Before crypto, I was working as a risk manager in a credit and market risk platform, and where I used to manage risk for some of the big banking portfolios.
All right, fantastic. And for those who are wondering about me, I'm a former management consultant, worked at the Big Four in strategy and operations, worked at banks and payments before I got the crypto bug in 2017. Since then, I've been an evangelist and a convert looking at investing and trading. So that's a little bit more about us, but let's actually get into the questions. So guys, we talked offline a little bit about this. The USA tokens are coming out big. Obviously, we had the push of Trump's meme coins, but we're not actually talking about that today. We're talking about this new narrative that's come out, which is really more about, are tokens and projects that are originating in the United States, are they going to be prioritized for legislation coming out for the US? And so I think a lot of people are picking up at that. So I saw that CoinGecko, I believe, actually created a list of tokens that were supposedly USA tokens. Solana was on there. I think Ripple, XRP may be on there. And so it's really kind of a little difficult to say what exactly would meet that criteria. But I'm kind of curious, as you guys hear this narrative, and I know there'll be new ones that are going to be coming out later in the year. We've already talked about AI agents. I'm sure there'll be other ones coming back to DeFi. Amit, I want to start with you. How do you start to, when you hear about a new narrative, how do you start to think about, okay, is this something I need to pay attention to? Is this something to look at specifically from a trader's point of view?
Looking at the narratives, interestingly, being in the industry for 4 or 5 years, we have navigated through many narratives. There was a Luna narrative, there was an FTX narrative. So over the period of time, I've built a kind of a system to look at the narratives, which one I can get into straight and which one I need to take a step back and start filtering out the information. So I bring this back to the current situation, right? Now we have two set of narratives that are running simultaneously. One is basically driven by, like you said, Made in America. And the second narrative I've been looking at is from the hyperliquid side. So when I approach these two narratives, I look at each narrative in a different way. Like, not all trades are same, not all narratives are same either. So depends actually who's pushing. The way I filter out the narrative is, have I seen this narrative before? Are there any telltale signs of how it has played out in the past? And then who's pushing that narrative? If it is a new set of crypto community that is basically pushing the narrative, then the point is basically, let's see where it plays out, how it plays out, get the details of it. But if it is pushed by somebody like President of United States, then you have to pay attention. Then the question is different. I mean, you view that narrative from different perspective, because they are not pushing a token, they are pushing an agenda. Agenda as in from how the regulations will look like, what regulations will play out, and who will be the beneficiary of those regulations. So that's how I felt.
So you sorry, I think we lost a little bit of your mic there, but you're saying you kind of categorize the narrative into different buckets, right? They're not all created equal. So you're putting a little bit more weight perhaps on the USA token one because the narrative is broader speaking. It's coming from the regulatory side of things.
Yeah, I can come in here and give.
Yeah, Benjamin. Yeah, weigh in here. How do you start the same way? Do you kind of categorize to begin with?
The reason why a narrative is always advantageous, why people like narratives, is that if you take the whole crypto ecosystem, the number of tokens is always ever increasing, right? Like in the last cycle, in the first cycle, we had some 800 tokens. In the second cycle, we had some 15,000 tokens. And now, thanks to Solana and it's SVM tokens, now it's like millions, and nobody has an idea how many tokens have been deployed, how much has liquidity, and what, right? Now, in such an array of list, how are you going to be able to justify and say the token you are looking at makes sense, or the baskets you have, the portfolio you have makes sense, right? And typically, you have to go from investor perspective as well. How do you make it easier for the investor to decide and say, okay, I'm going to put in like 5% of my portfolio into this particular idea? So it's more about an idea. Now, AI agents is one idea, DeFi is one idea, right? And that idea takes shape with multiple sub-narratives as well. The Made in USA model, the way I look at it, is a way for telling the US users in future that they should basically use those tokens as a benchmark, to make it easy for you. I'm going to tell you, I'm going to kindle your patriotism and tell you these are the set of tokens that you have to look at, because these are all USA made. Now, why wouldn't you basically allocate into it? So there is a huge advantage when it comes to allocating the patriotism agenda on one side, and that definitely will attract a lot of capital. So you have to see whether the specific narrative idea or this basket will attract capital. As a layman, if you're able to sense that, well, I think my friends who are across the table, or in the corner of my street, or my driver would basically be excited to hear about something made in USA and allocate into it, then that is the narrative that's going to gain a lot of volume, right? So you have to always think from very simple perspective and then complicate it, in my opinion.
Complicated, okay. So you first have this sort of categorization on it that you're talking about, that not all narratives are equal, right? Some are going to be much more substantial in terms of what they can do. And I want to get back to that in a little bit and hear, Amit, your thoughts on sort of the distinction between what we're seeing from Made in USA tokens versus like a hyperliquid. Then Benjamin, you're talking about there's always an idea with any of these sort of thrusts that you're going to see, they're going to attract capital. So we need to have a narrative to begin with. That's going to be part of the storytelling. And the simpler the story, the easier it is to see it attracting capital.
Yeah. So specifically talking about Made in USA tokens, right? If you look at the list, I mean, the list itself, it's not new tokens. All the tokens that are there, they are established over the years. So narrative fits very well. Then it's basically you're not chasing something new that has come in. So what you're trying to do here is, the way I started looking at is, once the Made in USA narrative started, I mean, specifically, let me share my screen. The way I'm trying to filter out the noise here, right? So most of the tokens, this is basically Made in USA category. That is where they go.
This is from CoinGecko, right?
Yeah, that's from CoinGecko within that. So I started filtering out, because once you have the list, right, then the first point is how you filter out the noise. So the way I filter out the noise is, again by volume. What is the volume on a token? If the volume is 10 million, there is no point you can deploy big capital there, because the open interest would be so high, it won't let you do any trade of size. So there is no point spending any time there. So then I basically start filtering out, saying, let's say there is a daily volume of 100 million. That's a starting point. That filters out quite a lot of tokens. So that list goes down. Then the next I apply as a filter is, what is the market cap? That might be 500 million. So you apply that. That basically filters out loads of token for you. And then you can start seeing from that perspective which tokens you can trade. And most of the tokens that come out in the list, like you can say XRP, Solana, Cardano, Chainlink, and these are all established tokens. So you can, then it becomes easier. Now, rather than looking at 500 tokens, you are looking at only a handful of 20, 30 tokens. And then from that point onwards, it's much easier. Now it's not a new basket of tokens. It's the same tokens, but narrative is behind them. Then you start looking at how it is basically what the chart looks like. Is there a trade? So that's how I start to filter down, basically based on the narrative. First point of identification is the volume, and then looking at what the market cap is, so that you are not jumping on something that is here today, gone tomorrow.
Well, yeah, and I want to actually double click on that point, because here you have, I mean, specific to this narrative, we have established tokens that are fitting into this broader narrative. And we all know, if you follow the playbook of Trump, he's a showman, right? And so he's going to be talking about this anytime, if this is the direction that they go, he's going to be talking about these tokens. He has no idea how they work or what they do. What about instances where the narrative is emerging and the tokens aren't as established? Right. So and maybe it's a mixed bag, right? So you've got DeFi, right? Where we have seen some newer protocols like Athena came out just over a year ago versus Aave, which has been here for 5 years. And, there's hope, we talk about it during the flow report every time with Ben Lilly, this idea that there could be a DeFi emergence that comes back as regulatory guidelines start to solidify and give new breath to that. How do you go about thinking about, okay, here, let's assume we see good amounts of TVL, we see good volume, they hit all those criteria. Is there something you're looking for to kind of say, okay, I want to look through established versus new ones from a trader perspective?
Specifically, when you start looking at the new tokens that is coming out, right? The first thing you have to be prepared is for the volatility. I mean, not 5%, 10%. You have to be prepared for 50% to 60% volatility. And that's the mindset you go in with. First, you see, okay, I assume this is a new token. There is a good narrative behind it. There is a good team behind it. There is a volume behind it. There is a lot of trading activity, and there is a mind share. Now I'm prepared to play the swings of, let's say, not around 30, 40%. And then you start analyzing from that perspective. Okay, now here is a chart that is not on a daily basis going just 1%, 2%. It's a new narrative. You expect a volume to be there. You expect a volatility to be there because there is a narrative behind it. And that's where you can start thinking about, okay, how I'm going to trade this. So that's more on the token perspective.
Benjamin, what about you? I mean, we talked about you look at a narrative, you're able to kind of qualitatively look at it and say, okay, how simplistic, how good can it be at getting capital into it? Then you make a determination. Then are you then next looking at tokens and kind of going through the same process as Ahmed? Do you have a different approach?
Similar process, but I have two sides of the story to that coin. There's one perspective where you want to basically allocate only to the large caps or the established coins because you think those will do well and have shown performance. The second angle I have is that, well, if you want outsized gains, you have to go to the tokens which are below that market cap and volume. Why? Because the volatility on the tokens which have high volume, that would already be much lower and probably already have a very good allocation in most of the portfolios of global traders. But some of these tokens which are, let's say, below 500 million market cap and doing less than 100 million on spot volume, these tokens might see a sudden flush in volume coming in because everybody will be like, well, there's like 50 tokens. Now I want to figure out, I don't know which ones to go in with. So let me put in money everywhere. Let me put in like some randomize everything and put it in. And some people would be like, in this, I like the AI narrative. So let me put into the AI narrative inside the Made in USA token. So there's always sub narratives in a narrative, right? And most of these people are not going to your deck screener or an exchange in Binance and going and checking if there is spot volume or per volume. Sometimes some people just like the logo, some people just like the names. You have to think of them as a very average IQ investor who are basically making emotional allocations because of the narrative. So if that is the case, where would they be going to basically see if they can make outsized gains? It's going to be the low caps in your list or the mid caps in your list, which is why we saw XLM, which is Stellar, run like crazy. Even though it's a mid to large cap, it is highly unallocated because Stellar hasn't been doing well for years as a blockchain. But as a token, it was also unallocated. So, look what happened. When even like a few millions walked into it, price just rallied up non-stop, right? So that's what happens with mid-cap to low-cap tokens in a narrative. So you have to always look at how you want to define your portfolio, right? So inside the Made in USA situation, what do you like? What do you trust? Are you someone who trusts RWA models better? Are you someone who says like banking model better, which is XRP, right? Or you come in and say, okay, I think all AI tokens will do well in this. Now you have to allocate your portfolio in that manner, because if President Trump succeeds with the zero tax policy for the Made in USA tokens, it is possible you will see way more allocations come into it, because I don't know of many assets in the United States which have zero taxes. I do not know myself. Maybe there are better accountants over here who
No,
can,
I can.
match that, but I don't know of any asset which has zero taxes.
There
Right?
isn't one.
Yeah. So, and if you tell me that one of those assets, even if they existed, it's unlimited and it's seen flows, and irrespective of whether you like the token or not, with these list of assets, these assets basically have a limited supply. They're not unlimited supply. They all went with the same Bitcoin narrative on creating limited supply economics. So you got to be very cautious if like 10 billion walks into this pot.
Yeah.
So having no allocation to this is also a bad idea, to be honest. And keep in mind, this is not just about US traders. It's also going to be about everyone who basically anticipates what US traders will do. So the anticipation is what matters as well.
Yeah, the market FOMOing into this idea of what it can be. Okay, so you have a way in which you can filter down the tokens. I think a perspective from Amit being more looking at the liquidity, seeing something you could trade. I think within your existing system, Amit, of looking at sort of weekly, daily, monthly closes, perhaps, and we can get to that in a minute. And then you've got this idea of like not skipping on sort of the mid caps, which could see a flush because there's of the under allocation. Which I think is definitely something that traders should be aware of and think about sizing appropriately. There's also the risk, I would imagine, that some of those don't all sort of get a wave, right? They don't all participate equally in sort of the narrative. So I think that's good kind of construction for a model of how people can think through this. Where do you go from there? Because one thought is, okay, so now you start to see the narrative coming. You've qualified it. You've said, hey, I think this is something that's got some legs. In this case, USA token, I think it definitely has legs for a period of time until we see something that says it doesn't, right? And so now you can start to position based on looking at traditional metrics, the stuff that you guys share every week with Panda, with starting to look at volume, starting to see, are we seeing something in the order book flows or the order flow? What about sort of moving this on and thinking, okay, do you start to see signs that it's going away? Do you worry about that at this stage as you're qualifying it and starting to trade it? Does it all come out in the data that you're doing every week? How do you think
Well,
about that?
Well, honestly, we're always worried that a narrative is going to go away, because this market has increasingly become something about. I've split it into three periods, to be honest. There's a 30-day cycle, there's a 60-day cycle, there's a 90-day cycle. So how I look at it, and today morning I was talking about this to one of the prime brokerage, representatives who we work with very closely, on how a narrative is basically becoming like a 30-day cycle, and then you have a bit of a sideways on that for another 30 days, which is your 60-day cycle. And then you basically have a downtrend on that narrative for another 30 days, totally completing a 90-day cycle. Now, it feels like, this is totally unbacked information. This still feels like there is money rotation coming into the market suddenly only for a 30-day purpose, and it is not able to sustain itself beyond that point. So, on a layman terms, it's like someone is lending money for 30 days to go and gamble in the market, and money rotates, and in 30 days it comes back into the treasury and sits, right? So if you are going into a shortening cycle type of a situation when it comes to narratives, I don't think the hodler model for narratives has worked out that well for a lot of people, whether it was meme coins or AA agents. Look at AAXBT, look at AA16Z, everything is back to its pre-November levels. So there's really not much retention. It's all some of my friends say it's attention economy. It's short term. So if you're going in, you have to go in because, well, this is a narrative that's hot now. I'm going in now, but I'm wary of it. I know I will get out. Are you a trader or an investor at this point?
Yeah.
Are you looking to hold it for longer term? Then probably be ready for all the volatility and downside. You will not be able to minimize your drawdown in that case. But long term, because of thanks to the printer that we have in the country, it will still end up doing well as long as the bull market continues. So that's all you can bet on. But if you want a better guaranteed asset to work on, just buy Bitcoin. Forget everything else, right?
I've never heard that from your mouth.
Yeah, if you just want guaranteed asset, just buy Bitcoin, find a staking model, and be happy about it. But obviously, people are not going to be happy about it. If you are going to say that, okay, no, I want something better, then be prepared for volatility and drawdown, because the time period is going to be short.
Ahmed, I mean, we're talking about fruit flies at this point with 30, 60, 90. Do you see it the same way? Are you looking more at the time cycles when you're thinking about a narrative, any narrative, I mean, USA or, the examples you just gave? Are you looking at it more from a data-centric perspective where maybe you're seeing liquidity starting to go down or volumes go down? How do you evaluate the strength of a narrative when it's starting to unwind? Oh, Ahmed, did we lose you? Oh, no. Okay. All right. It sounds like just for everyone out there, I want you to know, we've invested in mics, we've invested in new computers. We're doing everything we can possible to give these guys the best quality production perspective. And so there may just be
no, it's a conspiracy by the United Kingdom to basically stop Amit from giving insights.
I didn't want to share with the audience.
I'm still
got back.
Amit. Okay, you got past MI6. Okay, let us know. So again, what's your thoughts there? And if you're starting to see this wind down, how do you think about that?
See, from my perspective, I jump on a narrative from the entry side of things, because once you decide on which tokens you're going to trade, then it becomes kind of run of the mill work. Then the same ranges come in play, same order book setup comes in play, and then you start measuring the liquidity. So it's most of the times it shows up on the chart. So when it is running out of steam, you will start seeing those wicks to the upside, liquidity grabs to the upside, and there'll be no support on the order book. And then you can see from that perspective, the order book, which way it is getting thickened, where the trade frequency is, where the volume is coming from, and what time zone it is coming from. And those things play a kind of part on decision making, saying, okay, I knew this is how far it will run. Now it is running out of steam. I don't want to trade this anymore. Or most of the cases, right, it happens by the time this happens, like Benjamin was saying, there is another narrative that plays out. So basically, we start to connect the dots here, saying, okay, these are the tokens that are running now, get into the narrative, and then you see the exit there. As in terms of, as you said, volatility is not there. It just dries up suddenly. The volume is not there. And then all of a sudden you start seeing the wicks to the upside. Then you see some other tokens starting to move. So you see there is a price money they're trying to rotate.
So there you have more from a technical perspective. I mean, the data is really telling you that this is starting to get dried up. I think I read something yesterday. They said, no matter what it is, the finance system will bleed it dry. right? No matter what the narratives. So you can start to see when it's bleeding dry. All right. Well, I think you guys have given a pretty good framework for how to think through any kind of narrative, from a qualification to applying it specific to this USA token narrative. Ahmed, start with you, and then I'll come to Benjamin. How are you playing this? You talked about already, you showed using CoinGecko as sort of a way to start to filter that down to tokens that you can use within your system. Are you starting to look at this more? Are you going to be studying any of the information that's coming out in terms of the narrative kind of evolving as more regulation stuff comes out from the White House and Congress, or are you just going to focus on those tokens, look to trade them? How are you thinking about that?
I'm more interested in listening from SEC rather than White House. So funnily enough, we haven't heard anything from them so far. So that'll be a basic. I mean, there was a lot of discussions going on why Fed is not kind of cutting the rates, or basically it's a hedge against what the tariff is going to play out. So yeah, I'm waiting and watching how this kind of a tussle plays out between the White House and the Feds, and then what SEC comes out with.
No need to rush in. Benjamin, what about you? Are you starting to take positions, or are you sort of on a wait and see as well?
I think I'm going to wait. I'm not in a rush, to be honest. I'm seeing some signs I'm not so happy about. And I think there is a bit of selling skew across other hedge fund desks that we collaborate with as well. And there is a decrease in credit line requests and everything across the board in prime brokerages. So I see the demand going down a bit. And this necessarily doesn't have to do with what is happening on DeepSeek, NASDAQ, or President Trump. It's also about the Chinese New Year that's coming up. You have to keep in mind that the entire Asia basically takes a break. They go light on it. They go light on the portfolio allocation. So I don't think we'll see something crazy happen. If we see a run, we see a run. But I think, there's going to be a bit of a pause.
So one thing I would say and take away from what you just shared is that always put the narrative within the context of the market, right? You could have something that's absolutely paradigm shifting, that's amazing, but that doesn't necessarily mean it has to run tomorrow. If there's other factors like liquidity starting to become a little bit harder to source, credit is starting to become a little harder to source, et cetera, demand is kind of going down, which is one of the reasons we always try and come back to the flow report that we cover with Ben Lilly later on the show to sort of see, are we seeing some of those signals early on? I would say for anybody, I'd love to hear your thoughts in the chat. Let us know if you're trading narratives, other ways in which you validate narratives from a trader point of view. And if you've got more questions for these guys, definitely leave it in the chat. But I think with that, we can wrap it up and move in to see what kind of trades we have this week. One last thing I will say is that if you've got ideas or questions about some of the data, and you're looking for ways in which you can get better insights on the data, definitely consider joining the Panda group. There's been a lot of great discussion just in this last week. I think Ben Lilly's kind of managing that over there, and we'll be showing some of these charts, but definitely something you can get into. It's free, so it's an amazing tool. So guys, I was looking at the charts. I mean, I think there was a narrative, a really brief narrative, a 24 or 48 hour, maybe it's going to go on for 90 days narrative about AI destroying all the value from a Western perspective. As DeepSeek came out, that impacting Bitcoin and the rest of the markets. And, I woke up this morning, I'm looking at the numbers before our show, and it looks like it's about where we are today, which is, Bitcoin's pulled back over the last 7 days, down about 2%. It's sitting at about 102K. Ethereum, it's down bigger. It's about 3%, 3.5% down at 3,100. And then Solana sitting at 238, down 1.6%. Kind of in line with Bitcoin from a pullback. Kind of, again, surprised that we're seeing Ethereum not, having a bigger flush than Solana. Guys, walk us through what you're seeing from Bitcoin. We've talked on the show, maybe looking for a pullback to the mid 90s as a good trade setup. Curious if that's still the place. If you're still expecting that, if that's still a good way to play. So Benjamin, or is it Ahmed? Who's coming on first?
Let's start with Benjamin.
Okay, Benjamin, you there?
Well, I'm not seeing much of interesting setups to play, to be honest. Be it any of the asset classes, and this is like including TradFi, to be honest. I think we are up for a chop. I don't see a massive reason for some crazy de-risking apart from impatience on expectation of returns. I think there are a lot of people going to get chopped. I mean, if you think about it, from the mid of December after the presidency results came in, like we hit 90K at that point, and since then, if you see, we have just been between 90K and 108K or at realistically 108K, and we've just formed this range, and we still don't see a light of it, a light at the end of the tunnel yet.
Mm-hmm.
I don't see some massive seller coming in, but I don't see a massive buyer coming in as well. Fundamentally speaking, as well, we've not seen any large tether prints. We've not seen crazy bases from CME side or ETF going crazy. The basis has basically died. So when I say basis has died, there was this cash and carry model on the CME ETF structure. It was a paired trade that was one of the reasons why you were seeing constant inflows into the ETFs. I think that is going to tone down a lot because the CME traders have basically taken out a lot of their positions. Nearly 17,000 is the amount of Bitcoin positions on open interest in CME that got closed in the past days, which basically dropped all the premium that CME had. So there is no, like, this is what a cool-off period looks like, rather than speculating whether this is the top of a market and stuff like that. If a correction comes, you have to basically be ready to utilize that opportunity. Doesn't mean we will not see more pumps out, but I think we will continue the chop much longer. So it means just, be careful on the positioning. I think if you get a good correction, it would be a solid reason to position. Or like, unless you see some of these alerts on, for example, like what I show on Panda, some of these intel about very strong books, you can take a bit of risk and assume some positions, and the books are looking healthy, so you can try a bit of an upside. Until you come across one such situation, I think it's a bit of a waiting time at the moment.
So I mean, what I'm hearing is the outside markets. So I mean, even beyond what you're going to be seeing from a intelligence or alert perspective on Panda, just broadly speaking, it seems like the market is a little bit of taking a breath.
Yes,
and there's probably a lot of ways we could explain that. You've got a new changeover in the administration in the United States. It's a brand new year. We're in January. Things can get slow to get off. You have this disruption with new AI after years or 18 months of everything going into one side of it. But I mean, I think simply put, if the market's going to have a cool off, it's going to have a cool off for a period before it starts to move. So talk to me from a trader point of view. How comfortable are you sitting on your hands? Do you feel the need to try and scalp something? Are you willing to just take a breather for a week or two that you can walk away and say, okay, listen, the market isn't going to give me what I want. I can just lay off.
Panda is a platform where we are basically seeing like $3 billion in volume on a monthly basis. That's the amount of volume that gets traded on Panda terminal. So that's the type of traders we have. So certainly, I'm pretty sure nobody's sitting on their hands. I don't think me or Amit are sitting on our hands either. But it's very tough to basically say or discuss a particular setup because it's all looking like it's not ugly, but it's certainly not a spot that you can confidently go in as well. I mean, come on, we are sitting at 103K. The peak was 109K or something. And, and on BTC, it's very hard. ETH has gone down back to its 3K area. So it's still cementing itself in that same 3K zone. So on ETH, you basically can still take a position if you're a hodler and target like 5K.
Don't touch it. Don't touch it.
So hold on. I want to keep us on point before he starts talking about other trades. I want to focus on BTC. Then we'll get to Ethereum. We have some questions from the audience.
Focusing on BTC, I think we can wait. I'm still saying like it's still above 4-hour 200 moving average, which is at 98,700. We tested it on Monday and we held it, and it's pumped back up, but it's still a lower high. As you see, 102K, it's great, but it's still a lower high. This prolonged sideways is a pain. that makes it a bit harder for people to typically allocate. And keep in mind, a lot of people borrow money, even hedge funds, a lot of people borrow money. So right now, what I see is hedge funds are returning money. They're not holding up the cash because, the basis is simply not there to capitalize on it. So yeah, I think there is a cool off, a very clean cool off. We have to wait.
Have to wait and see. All right, Ahmed, I'm going to bring you up here from a Bitcoin specific point of view. Are you seeing something different? You had a lot of outside of even Panda signals, like, hedge funds returning capital is a very interesting one. But what about you? Are you looking for a trade this week? Are you using some of the, daily, weekly, monthly closes? I know you've kind of switched to weekly now as we move into 2025.
Yep. So I expected this to go down 96. So if you can see my chart, so this area is basically, there are a lot of bids sitting in the order book, and from the market profile perspective, there is a lot of basically auction that is unfilled bids that are sitting in this area. So you see the market come down to this point. We had it from last week. So we were expecting this to happen. When we discussed last week, we were here at this point. We were saying if it breaks down, it might go in this area. So it came and touched to the dollar and ran up. So I'm expecting it to come back to 96K and then start to move up. Basically, the trade, this is a chop zone. You can take a trade, but be mindful. So now from here, right, the way I see it, this is your order block that is sitting in the 3% area at the top. And now you have another order block. When I say order block, I mean there are a lot of bids and activity happening. And there is another 7% drop here. So it can run up to 3%, but eventually, before it can break above 105, I won't touch it. Or this is above 105, I'm happy to take along. Otherwise, I'll take from 96 to 95. This is the range where I'll try to long it. And if you want to take a hedge in between, or basically if you are feeling bored, right, as you said, if you want to take a trade, you can from 102 to let's say 99K. But you have to be prepared to cut that trade at 99K if it falls below this previous week low. Because reason being is there are loads of bids sitting here in this area. So this area is where is basically very heavy bids are sitting. And then next after that is this area. So this is mostly, we talked about these things, right? In the past as well. There are two set of bids that sits in the order book. One is for action, one is for signaling. I think in what I have seen so far, the bids in the 90 to 85 areas for signaling, like, this is it. We are not going below this. And these are the area between 97 and 95 is where the bids are sitting to be filled. So you can see the way market is playing out. And these are the bounce that you're seeing. It's again coming from the same. There were a lot of bids sitting at that level. They're all got filled up. And this is the bounce that is coming through them. So I expect this to come back to 95 and run up if it has to come.
Okay, so it feels like waiting to enter the lower zones, those lower blocks, is definitely a higher conviction play.
Yes.
Okay, and definitely, I mean, I'm not sure we're available to do that today. We talked about being able to show some of that, actually creating some trades on Panda. I would definitely say if you're interested in doing that, definitely like and subscribe to the channel. I'll be back here for these live shows because we'll be doing more of that in the future as it starts to roll some of that out. And obviously, you can also join the Panda chat, and I'm sure we'll be talking a little bit more about that. Okay, so
we are in process of setting that up so that when we talk about these zones, we'll set up the trades so you can see how the trades are set up, and then come back to those trades in a week's time and see how it played out.
If MI6 doesn't censor our success rates here, we'll have to see. But no, so we want to show how people can actually ladder down into this to create higher conviction trades and actually make them happen. It's not just talking about, oh, this is the way you could trade. It's like, oh, here's how you actually do trade, which is pretty exciting from my perspective. We did have a question from Light Signatures. He was asking, when do we expect to see something that would actually push us into an all-time high? And if I take everything that we just said, right? The best conviction plays are at lower order books because the market is cooling off. Everything that Benjamin, you just shared about, what you're hearing from hedge funds, the credit lines not getting the same amount of usage, just a cool off period in general. I don't think that an all-time high is something we should expect in the near term. But is there anything you guys are looking on the horizon that?
No, I think, see, this is the thing, right? Often you have to keep in mind a lot of these flow changes might not immediately reflect in the price action. Okay. Like there is no reason we don't see a 5% pump, which basically takes us to 109K or something like that. There is no reason. It can happen just as a result of degenerate trading or some fake news or some real news or some potential Trump announcement or something like that. It can very well go up. What we care about is it going to be able to move on a consistent basis? Are we going to see it as a trend up or going to be just able to hit an all-time high? What is it that we are looking for? If it's just going to be about hitting an all-time high, you don't need any of the points that I mentioned for a regular, like sudden demand from some $20 million buyer or a $50 million buyer or a $100 million buyer on ETF side can basically spin up some narrative, some company announcing that they are basically interested in BTC could just push up this threshold and we reach 109K. You cannot take that out of the equation at all. But on the bigger picture, in the short term, the problem is that we are seeing a bit of cooling down in flows. That's what we are seeing. We may be wrong as well. The information we collect may not be exactly perfect as well because it covers a set of traders who are basically institutional and do a lot of work on a particular perspective, right? And you can also see that Asia is going to have a holiday. So accounting for all of it, is it worth positioning high leverage? Is it worth going all in from here? I don't think so. That's my point.
Yeah.
So
okay.
Price target wise, as a local trader, I'm always open for, seeing 108 basically being tagged again, 109 basically being tagged again. But that's not my base case. If it gets there, I'm not going to be surprised and say that, oh, my thesis is completely wrong and I'm basically getting liquidated on my BitMEX account. No, that's not basically what is going to happen. You have to always keep that open, but because it's the range high. It is the range high for the past 2.5 months now. So you have to keep that open. But the point remains, can it sustain above that? I don't think so. Not yet. I would like to see more signs of things happening. If yes, then it gets easier.
Okay. Yeah, good perspective, Ahmed. Do you have anything to add to that?
Yeah, from my perspective, I was about to say, like, if all-time high comes, right, it will go through the chart. You can actually see it happening. So anything above 104K and 105K, yeah, it's a good trade.
Okay. All right. Well, I think that's a good setup and mindset as we start to look at both Ethereum and Solana, maybe even some other tokens. Let's actually use that as a point to transition into Ethereum. So last week it was all hands off Ethereum. You do not want to touch this. It's mostly toxic waste in the words. I'm summarizing Amit's views, maybe cherry picking a few of his comments. Do you see a change this week? Obviously I mentioned before, it had the biggest pullback of the three that we discussed, at 3.4% over the last 7 days. Is it starting to form the base? You were really looking for a structure on it to give you confidence that this is now starting to be something I want to trade. Has that changed?
Not really. The way I see it here at the moment, if you can see my chart on ETH, right, on a higher time frame, the way I see it is basically it's getting ready for a bigger dump here. So this is basically our first initial pull drop down, and then it's coming back and it's forming a base here. If it starts to drop down from here, and then you have a problem. So this would be something going from here down like this. It has to basically start trading above 3,300. Previous week mid 3,300 and above is a safe zone to start trading. Before that, don't touch it, I would say. Because this has all the telltale signs of coming back up, forming a base, and then dropping back harder.
So good perspective there. So definitely continue to be hands off until this really starts to show some strength. Yep. We had a question from Max Mayer. Says, what's the worst case target do you all see for ETH so I can reduce my positions? Okay, we're not giving advice, but let's see. Is it 3.5K or 4K? Chance to see a counter rally When do we expect it to bottom out against BTC? Do you have maybe that last one? Let's just talk about that ETH versus BTC. I think it was maybe 6 months ago now, roughly, that we thought that ETH had maybe bottomed out against BTC, and clearly it continues to bleed. It continues to struggle. Any thoughts there on like when that will actually end?
I think it's still struggling, but I would say 2,500 to 2,700 is a good range.
Okay.
Yeah,
And
I think I can help on the ETH-BTC part. ETH-BTC dropping has nothing to do, like it's partially to do with ETH strength, but it's mainly BTC is very strong, right? You have to acknowledge the fact BTC is quite strong. There's a lot of narrative still riding on the BTC side, so it is going to remain strong for a while. And when it probably hits the top is when you probably see a very good solid bottom to form on ETH side. Now, despite this, despite ETH BTC bleeding down on Zon, you've seen tokens like Link, you've seen Aave, you've seen a lot of like solid projects do well. So it's not like ETH basically underperforming BTC has led to all the altcoins die, but it's all about what those tokens and the narratives in those tokens are able to catch up while you have this degenerate attention economy popping up on the Solana side, right? So you have a competition elsewhere. The competition is not from BTC alone, it's elsewhere as well. And you have Sui also coming up. I don't want to get into the Sui discussions now, but you have newer L1s coming up, and you have apps where you don't need Ethereum to basically come in and transact at all. Even though underlying you're still buying Ethereum in order to transact, but there's a lot of things happening. There's a fundamental shift happening. I think Ethereum will still find its solid ground and start over and keep running up. The way I see it, it's still consolidating. It's still above the 3K area. It's for nearly 2 months it has been in this area. I don't know if it is going to break down to 2,400 or not, but Vitalik is trying, so give that man some some space to do it. And we are trying on our side as well to basically explain about the ecosystem and push it forward. I would not look at ETH right now and say, okay, I want to trade ETH. Like, don't trade ETH. Please don't trade ETH. If you are focusing on ETH, just buy ETH and put it on staking somewhere. Be happy about it. Like, don't use ETH for a trading asset. That's like, if you go to Dex Screener, filter out by 100K liquidity, you have 700 assets on Solana. You have 430 assets on ETH mainnet. You have assets to trade. Forget about ETH for a while. Let it consolidate. Let it find its place. It will run up. You don't have to rush into it right now.
So today, Benjamin's putting all his heart out. Honestly,
I can see it's a change of heart.
It is. I'm feeling the emotions. They're coming right through the screen. All right. Well, Max, hopefully that gives you some perspective on where these guys are expecting. Obviously, nothing's guaranteed this to go. From I just relooked and read your question here was kind of an upside target. I would definitely suggest listening to what Ben Lilly's actually talked about this a little bit more and been a little bit more vocal. I mean, obviously, all this is pure speculation of where this is going to go in terms of the top side. But he shared kind of his views, and maybe we can even ask him at the Flow Report what he's expecting. But I think it's something much higher than 35 to 4,000. And even in the last video that we just published last Friday, talking about why Ethereum has struggled so much over the last 2024 because of the Athena product that was launched on it. We kind of covered this fact, and the fact that if the ETF flows change, if we start to see momentum coming out from the White House and we start to see regulatory clarity, that could be a huge boom to Ethereum, which at the end of the day still has the best tooling from a DeFi perspective. And I'm sure people could come out there and with knives and swords and come at me, but that's kind of the perspective of the guys that I trust that they bring to me. So, all right. So what we're hearing is—
I agree. I have to intrude you here. It's actually very good to basically develop things on the EVM ecosystem because you have a lot of documentation. Developers have been very good. And honestly, like I trade a lot on Solana. We build on Solana. But the amount of errors that you have to sit through when you build on Solana, you cannot even put a count on it. There's RPC problems. There's, like trade doesn't go through half the time. You have mountains of problems, right? When you compare to that, EVM as a toolkit for you to build on top of. Keep the gas and all that aside. You still have L2s to capitalize for it, right? Arbitrum, you have everything else basically to take advantage of. But the point remains, it's still the place where you still have most of the support, all the documentations, all the examples, all the required things in order to build. So it's like still the go-to place that you can build on. It's going to be
you
hard
can build
to,
on EVM, but it's just you have to pay more.
I'm coming in, taking a little stab right as he finishes up. Okay. All right. So there you have it from a BTC perspective. You can have some trades if you're willing to ladder down. Ethereum, these guys, definitely not a trade this week to look at. Definitely more from a longer term perspective, looking to buy it, hold it, stake it, and get some of that yield. Let's move over to Solana. And we did have a question that came in here. Unfortunately, I think I lost it. It was on X, but it was asking whether or not Solana traded any of the meme coin activity with the Trump launch, the Melania launch, if Deploy.finance actually launched that or traded that. So maybe we can come back to that. But Amit, I want to start with you.
No, I can answer it here.
Oh, you can answer it right now. Okay. All right.
No,
usually I give you a little bit of time, but no, you're on fire today.
So Deploy.finance is not about sniping tokens. It's not a sniping project. It works based on data. So until there is enough data about a token, or it basically doesn't get traded. So how other people trade it is basically, something is happening, I'm just going to ape in. You can always do that privately, but that's not why we built the product for.
Okay. So yeah, so then it didn't make those trades because, as you said, there isn't enough data. And I think we're going to be talking about Deploy Finance a lot this year as you guys continue to roll out more functions and capabilities. But definitely something to keep in mind in terms of using the product. It's a long-term data-driven product. So okay, well let's get into Solana. Amit, I want to come back to you. Do you see a trade? I mean, we kind of talked. Bitcoin isn't really looking like a trade this week, or maybe if you're willing to ladder down, Ethereum isn't. Is Solana something that you're looking at?
I mean, it's similar structure to BTC. It looks like it's a lower high. And it's again coming from the higher order block where there's a lot of asks sitting. It went into that order block and got shot down straight. So this is looking like a same structure as Ethereum. It is making a bail down. Happy to basically trade it between. I'm waiting on Solana. I'm not touching it. Basically, there is a good trade to be had, but once it goes up near 200, so between 200 and 180 is a good trade. But before that, yeah, if you want to short it, it's a different story. But yeah, I won't trade it here.
Yeah, and I imagine Solana has been a tough one to short. For a lot of people, probably got their fingers burned when it's got some sort of surprise launch like a Trump or Melania token that just makes it rip.
Yeah, who knows? There might be more. There are more family members. Who knows what comes next?
There you have it. You got to really look at a family tree of the Trump family to ask who's going to be next. Okay. Yeah. So the 180 to 200. Benjamin, I got to ask you: do you still have the 180, 200, 220? Trades?
Yeah. But I'm thinking of taking profit on it.
Oh, okay.
You would take profit on that. I mean, you would have made good money on that. You can do it the second cycle, right? Take the money and the ladder.
Yeah, that's what I'm thinking. That's what I'm thinking. Because if there is a short, we are going to see further correction. Then just compound it up and let it run. Because it was I was very close to getting liquidated on it. Like the only reason why I did not take a loss on that is because I did not log into that account.
It was this candle. It was was here, right? It was this part that was like, it's going, and then turned around and did like what happened here. Trump came. Let's go.
Yeah. So it's like, I'm not logging into that account, just screw it. It doesn't matter.
I mean, that was the whole idea behind that trade, right? Yeah. Because the conviction was there. And the idea was, this is the outright gains that you wanted to showcase. I mean, there is a way to do that.
That was the whole point, right? Like you can have Trump come in, you can have everyone else come in. Yeah, sure. If you're able to get in on the first 2 blocks, sure. Yes. You are fast. You are probably making like 1,800%. But I don't think even a lot of US traders were even awake when that happened, right? So probably people made like a 3x And if you think about it, like zoom out and look at the chart, and you can realize that, well, it was game-changing launch, the way they managed liquidity and did not go and do some airdrops to basically push people into the token and all that. They basically have challenged the ACC to come in and tell whether it is they broke a law or not. But as a token, it did not do that fantastically well. If you were even late by a few hours, you probably did a multiple of 2 or multiple of 3, which you do with most tokens as well. Price multiples wise, it didn't do any different from other tokens. So relax a little. Bitcoin does it in a year all the time. So Trump did not do anything different from what you typically allocate your millions into Bitcoin and get it. It's the same thing. On the other hand, you wouldn't have been able to cash out the way you think just because the price value went up. There was enough liquidity. I agree, but it still would have been harder with what happened the next day on Sunday for the entire Solana ecosystem. Like the chain became unusable, right? So that also shows how good the chain is.
Yeah.
And so think about all those factors as well. So
yeah,
compared to that, my Solana trade was awesome. So, yeah,
that's the way to trade it. That's the way to trade it.
Let's go again on that Solana trade.
Yeah.
All right.
I agree.
200, 180, 160 this time, please.
Okay. There we go. All the way down to 160. All right. Well, guys, thank you so much. I think with that, we're going to wrap up the trade section today. Definitely getting some of those questions in from the audience. I appreciate you guys doing that. And we're going to move on. But look forward to having you guys back next week. We'll do another trading roundtable, new topic, as well as see if maybe there's some more trades on the table.
Thank you.
Thank you.
All right. Thanks, guys. And let us know in the comments if you've got questions about the trades, if there's anything else you want them to look at. And then obviously, we'd love to hear it from you. I say this with all sincerity. We've really worked hard on the production side to try and get better mics. Seems we still have some issues with internet, but I think beyond that, hopefully things are improving. Love to hear your thoughts. But Ben, welcome. How are you?
Nice little clear the throat sort of welcome here, but yes, doing great. How are you?
Well, I loved hearing these guys' take on the USA tokens, the Trump tokens, and how to think about trading them. And, Benjamin came out with his heart talking about Ethereum today. I felt like it was cathartic to hear him actually give back a little bit of love to Ethereum after what I can only say is 18 months of pure vitriol. So
I had to get a tissue, just to wipe the tears there.
yeah, you get a little misty-eyed. Well, I'm very interested to hear from you if the flow reports, if we're seeing anything from a supply and demand perspective that would go beyond what we just saw from the price chart, because everything we just heard was there's a cool down. It seems to be in some kind of state we're in. Taking any of the narratives aside, the data seems to suggest we're seeing a cool down. It seems to be going across all the assets. The better price action is below us, or the more likely price action is below us for the time being. And I'm curious if the data is going to tell us the same thing.
It will.
Okay.
It unfortunately will tell us a very similar story. And there's going to be a couple ways that we can actually look into that story with a little bit more detail. And then once I'll cover that at the beginning, and then later on, kind of in the second half, which is probably going to be a little bit longer, I would say, than the first part. But I'd like to really get into a couple of interesting tidbits regarding, one is Bitcoin flows. The second part, well, on the Bitcoin flows piece, there's a new class of holders that I was going to kind of look into just to showcase exactly what you're talking about, this slowdown. The second part is something that's going on with Ethereum that I do believe is kind of going under the radar here, and I don't see it being discussed enough. So we'll get into that. And then the last part is probably the most important one. This is, remember, check out the forest. Don't focus in on that tree right there, but it has to do with, what's really going on in the regulatory landscape, what's going on with Trump, AI, and that sort of component. So a little bit of format for today.
Yeah.
All right.
So where do you want to start then?
Yeah, we'll just get real quick on the ETF flows, just because they do dominate essentially the market as of late. And whenever there's excessive buying taking place on these ETFs, it does show itself and rear its head in the spot markets, and it's very kind of easy to see. But here's the kind of the trend for, let's see, this is Ethereum. I wanted to hit on Bitcoin first. Where did you go? There you are. This is the BTC balance across various wallets being held by entities associated with their ETFs. As you can see, if I zoom in a little bit here, there's not really much action taking place of late. This is the start of the year, the calendar year, January 1st. And really for the past, most of the week here since Trump's entered office, we haven't seen much of a change there. So that really strikes us from the get-go. If we look at the breakdown in terms of entity-wise, we can see it's really just Fidelity and BlackRock are really just the two main entities that we do need to focus in on. You can see here in Fidelity sort of just flatlined. We need to hear something from Fidelity regarding how they're going to go ahead and try to attract more AUM. How they end up doing that, that's just however their strategy is. BlackRock kind of similar. We can kind of hear these inklings taking place. But I don't necessarily think a lot of the discussion of late, and we'll get into this regarding the Trump component later, I don't think a lot of the conversation of late is actually focused on Bitcoin. It's going to be for kind of the component around Ethereum. And I can feel like I can hear people shudder as I say that. That's just the reality. All right. So then here's kind of another breakdown for the last 7 days, just to really kind of finish off this piece on Bitcoin ETF flows. You can see BlackRock's really the one dominating these net flows. So for the last 7 days, we have seen 15,000 inflows. I know I said it was kind of static, but relatively speaking, it's not a lot.
Yeah, so I guess curious, do you have any perspective? And there's always a lot of data to analyze and only so much time, but looking at other ETFs and sort of how they start January, is this a cyclical side to it, having to do with more the way TradFi invest, or is this just we're seeing a cool down that we talked about earlier in the show?
Well, you did have a bit of a sell-off in mid-December, whether that was for tax purposes, for the end of the calendar year, tax loss harvesting. I don't really know if there was that much losses being had at that time. Or if I think what's more of the likely reason is just having to do with just there's a lot of kind of excessive market activity that can be essentially packaged up as yield. And so that's kind of been the new sort of manner in which it kind of euphoric conditions start to cool down is how does that get packaged up into some sort of yield structured product? And there's let's see, I don't think I have it up on my screen anywhere, but the BVIV, shout out to Cole from Volbex, but he has an index that is essentially a moving 30-day snapshot, and it's kind of a time series analysis of volatility on Bitcoin. So BVIV in your trading view. And you can kind of see around this time point that, volatility did get suppressed. So somebody was just harvesting that premium on volatility at that time. So was it the volatility? Was it the tax reasons having to do with the sell-off? It's tough to say, but, it doesn't matter, right? The end result's the same.
End results, absolutely.
And we've kind of seen the kind of entrance of that capital once again at the start of the year, but for the last week, hasn't really been anything too exciting.
Gotcha. Okay.
Yeah. So looking forward, that needs a catalyst, right? And I'll get into that later, but in order for see those flows start to pick up again, there does need to be a little bit catalyst. There are some green shoots happening, which again, we'll get into later, but for pivoting over into Ethereum real quick for those flows, kind of a similar story. Just over the last week, it's been a little bit kind of stagnant. We had sort of the reintroduction of capital Some of it went into Ethereum to start the year.
Are you sharing? Sorry, Ben. Are you sharing a trade? Yeah, there we go. Okay, didn't see it. Perfect.
Yep. So we had the uptick on the 15th, and then let's see, since the end of last week, we've kind of just stalled out. And moving over, similar story, just BlackRock's the dominant entity. If I can it's because it's so much smaller. There you go. Yep, that's really just the only wallets that you really need to track. To go ahead and see what's going on there. Looking forward to bringing intraday flows into Panda for anybody listening that's in that chat. That should be coming here pretty shortly. And we'll try to push some alerts into that one. So if you're not in that chat, try to get in there because that's coming very soon. And then a quick 7-day snapshot, grayscale, right? Just moving ETH from one pocket to the other, that other pocket being essentially BlackRock over here. Let's see, that ends up being about 45,000 ETH flows. Now, that number, 45,000 ETH flows, is that a lot? Is it a little? In the context of like how much is getting unstaked over the last, let's see, we can kind of look at like a 2-day window here. And we can see that over the last 2 weeks, the net flows have been negative 139,000. So is 45,000 a lot of flows into the ETH ETF? No, it's not, right? And that's sort of been impacting one of these metrics that we like to look at.
Now, so the unstaking from the Beacon chain coming off, is that just being sold off, or do we know if that's flowing into something else?
I do believe it's flowing into a couple of things, but not anything that is a lot. So it must just be getting unstaked. I think at the end of the year, again, there was some selling taking place. One of the builders of Tyco, and he was the founder of Loopring, right? He showed up, his name just showed up, right? This was like entity wise, and somehow his name is an entity on that list, but he was one of the large unstakers in December. I don't think I've seen his name pop up in terms of bringing them back into Beacon Chain. But, it's essentially been a one-way flow of moving out. And that's impacted essentially what we refer to ETH as moneyness, which, what the heck is moneyness? That's like the weirdest thing. But when we think of like stocks that exist, stocks are predominantly just you buy and you hold. A lot of individuals will go ahead and buy certain stocks because they do yield a dividend or some sort of yield over time. And so some people just go ahead and use that as just a yield instrument, a way to go ahead and compound capital. Some individuals, based upon which stock it is, can go ahead and use those shares as collateral to go ahead and borrow against. This is not something that's available to everyone. But when we think of that type of stock that you can go ahead and hold and use as collateral, right? That sort of has additional money properties that exist over, say, a penny stock, which you likely can't use as collateral and borrow against. And so ETH does have these properties where you can go ahead and use it as collateral. And so the more methods in which you can use an asset on chain specifically, right? So you can go ahead and use it as collateral, similar as kind of a stock. You can go ahead and earn yield. You can stake against it. You can go ahead and lend it out, right? You can do similar things as well, but you don't get to go ahead and scoop up the lending when it comes to a brokerage account. And then you can go ahead and put it in DEX liquidity pools and all sorts of fun little things. And so as those use cases expand, the assets moneyness properties start to expand as well. And so we went ahead and categorized all the different ways you can use an asset in order to create this moneyness ratio. So a lot of ETH has been unstaked from Beacon Chain. And that's why ever since really mid to early November, sort of ETH properties have been kind of going down of late. So something needs to uptick that. And that's what I kind of see some green shoots as well for ETH. So I have some optimism today across Bitcoin and ETH to get into.
That was a request, I think, from one of our subs last week was to was to say something optimistic or positive about Ethereum.
It was, and I do have some positive vibes for today. So
Love it, bring it.
It won't all just be negative. Granted, we were super negative last week, and price sort of reflected all of that negativity, unfortunately painting just about everything red.
Yeah.
Okay. And the other sort of ETF, pseudo ETF, that we can get into today is, if anybody recalls 2020, we went ahead and we wrote something called the grayscale effect. And when it came to Bitcoin's grayscale instrument, it essentially dominated the market. Anybody who remembers 2022, sorry, I know, throwing salt in those wounds, but a lot of the unwind of grayscale when it came to Bitcoin, it really took down a lot of entities like Three Arrows Capital. Digital Currency Group almost went down. I think there are still stuck in some legal issues. We had BlockFi went down, Celsius, Voyager, etc. So it was quite the cascading effect when it came to the unwind. And that unwind was because of the way that the vehicle was structured, that accredited investors could go ahead and buy shares of that trust at NAV, right? NAV being, how many assets are in the trust, okay? And then you go ahead and get shares issued to you, essentially at that same valuation. Now, when those shares are trading in the open market, those shares can trade at a premium. And so if you went ahead and you purchased at par value, you waited a year, or for Bitcoin's instance, 6 months, and that premium existed, then you can go ahead and sell the shares in the open market and collect that spread. And a lot of individuals went ahead and they hedged those positions during that period. The problem was that premium eventually went away. And that's when a lot of, Three Arrows Capital, I believe in, it was early I think it was mid 2021. I forget when it was, but they basically were underwater and they doubled down, and then Luna happened. And that's when everything kind of fell in on them like a house of cards, right? But that trade right there is really what initially just put them in kind of a rock and a hard place.
Mm-hmm.
So Solana has one of these same instruments. And so we can go ahead and look at that. And this is what we're looking at right here, like the distance between the market price and, let's see, I believe the market price and the NAV right here. There you go. You can see this spread is what I'm referring to as a premium. And a lot of these big drawdowns that you can see, like right in here in September, and then looks like in October into November of last year, that's when unlocks happened. Okay. And it's important to realize that these unlocks, it's almost like a race to go ahead and collect that premium before everybody else. And so this week, we're starting to see some unlocks happen, and that's why I bring it up. Already, just in one day of trading, the NAV compressed from 1.6 down to 1.43 is what I believe the numbers are. And I would expect for the rest of the week for this to happen. Now, somebody gave me a shout out on X. It was like, oh, Ben, you're right. Looks like it is going to cause all this downfall of the market. To that, I want to say, like, no, that was not, none of the price action we're seeing has to do with Grayscale's instrument regarding Sol. It is very small, like a drop in the bucket in terms of the size of the market, right? That's important context here. I think I counted about 55,000, let me just pull it up, 5,270 shares are getting unlocked over the next, like, I think week and a half. Relative to the 7.2 million outstanding, is that a lot? No.
No, not really.
But the NAV is going to get compressed. It's going to get closer to 1. And so if anything, what we're hitting on here is that using this Grayscale instrument to go ahead and harvest this premium, that opportunity is probably going to go away unless we just have this insane market euphoria and people want exposure to Solana and they think this is the only way. So something to keep in mind. I know there's some unlocks happening regarding the estate later this year. But just keep an eye on this over the following week or so. I don't think it's going to impact the price too much, but it will have a little bit. Okay, so so ETF flows. I just kind of want to get that out of the way.
Yeah, I was going to say ETF flows across the board. Nothing great. Looks like we need a
little
catalyst.
upticks, but nothing to get too excited about. Bitcoin a little green shoot, Ethereum a little green shoot, Solana they're going to have a hard week ahead.
Okay.
All right. So now we're out of the way there. So I mentioned earlier, there were a couple of things I wanted to hit on, one of which was Bitcoin. And what I found interesting, like the first part to realize is, of course, there's that Coinbase premium I like to hit on. And if I pull up this ugly looking thing and I get that away. All right. So down here, this is just the difference between the price of Bitcoin on spot markets on Binance versus the price on Coinbase. Coinbase is essentially the custodian of choice for all these ETFs. So when they start purchasing, you're going to go ahead and see a premium in that market exist relative to kind of more crypto native exchanges like Binance. So when you see the blue start popping up around 14:15 UTC time. There you go. Shortly after or just before the open, then they got essentially a lot of demand that they need to fill up. So you can actually break this down to like a 15-minute chart to see it. But when the blue shows up, you got the premium and price tends to respond. Now, what's interesting is you are starting to see a little bit of green shoots in terms of like a higher low showing up on this premium over really the year since the start of the year. So I think that's a positive. You want to see this continually shoot up. Right now, as we're talking right here, you're starting to see a little bit of some blue show up on the chart here and there. And so that's what I'm referring to. Like there are some green shoots appearing. So keep an eye on that. And I think, it's really trying right now. This is essentially the hour window in which you would see it. Actually, let's break this down to 15 minutes to see what it's doing. There you go. There you go. So you saw the push right there. Looks like just after 14:15, so 14:30 UTC today, it really just turned positive. That premium resulted in price making a little move. So let's see more of that, and we would basically then see the ETF flows start to tick higher. So that's a positive.
And we did see, I think, the announcement from MicroStrategy. They did another $1 billion in asset acquisition, Bitcoin acquisition. So I'm assuming that could also be impacting that.
It would indeed. I think he still uses Coinbase, but I'm not 100% sure.
Got it.
On who he's using as custodians.
Okay.
But yes, that should theoretically be impacting that. The other part I was going to mention was look at this time period right in here, this kind of October into November into late November period. And we also had that premium show up, and you had that sort of divergent show up, which is what I was mentioning earlier, where you kind of have these higher lows starting to form. So you had a divergence on the premium while price was going sideways, and eventually kind of just took off. That period is pretty important. And why I bring that up is I went ahead and I revisited kind of like an old favorite chart, and it's HODL waves. HODL waves, it's kind of an interesting statistic. It's a way to look at like kind of behavior of a holder, like how long have they held a token? Because the way that Bitcoin works is essentially like you're at a cashier, you go ahead, you pay $1 or you pay $20, and the item maybe is just less than that, so they have to go ahead and give you change. So when you go ahead and accept the change, that amount you can see on the chain, and you can track it in terms of how long it's been since it's moved. Right? So how long has it been since that quarter or dime that you got moved? And that's what HODL waves tracks. So they're called UTXOs, unspent transaction outputs. And with the waves, you can break them down into these time periods. So, the amount of UTXOs of just time length of 24 hours, 1 day, 1 week, 1 week, 1 month, and here 1 month, 3 months. I kind of took the rest away because I wanted to focus in on this 1 week to 1 month period in this 1 month to 3 month period. And if you look kind of in here, you'll see that this sort of orange color started to tick higher right at the start of December. And if we actually go ahead and take these away, it's easier to see. You can see it ticks higher right here, right? So that means that these are tokens that have been held for at least a week. Remember, that was mid-November, say, when that price was running. So those tokens acquired during that run-up, you can see they have actually now moved into this holding period of 1 month to 3 months. That's why you're starting to see that now start to rise, really right at the end of the year, right? So you basically saw with that price increase, a new demographic show up into crypto that have now acquired Bitcoin.
And they're looking likely to hold it for a longer period for price appreciation.
Right. So that tends to happen. Essentially, we kind of refer to them as like a new class to crypto. It's like, okay, are you part of like the 2017 price appreciation class? Are you part of the 2020, 21 class, etc.? So many tend not to find it unless price starts to run hot. So it is interesting to note. Now, I didn't go back in time to see like how big this is relative to older time periods. We could probably just do a quick gander just to see. And it looks like it's not as significant as it was before, but it is painting, looks like lower highs. So, and you do see a little double top forming. So it can get higher, right? This demographic here, but we'll still see. And I think if the CB premium starts to rise higher, and we start to see price run up, you see the ETF flows, we're going to have a new demographic show up on this chart. But
that's positive.
They're not selling.
Yeah, they're not selling.
Right? Those aren't the individuals selling in terms of like the recent acquirers. This is likely probably the ones holding from over a year period. And there it is. You can actually see it's longer than 12 months. So there's your demographic. So those are the individuals who acquired this over a year ago. Those are the ones selling. Is this having to do with end of the season tax? Well, this kind of gives you some credence there. Okay. And what was the other item I wanted to hit on? You got CB premium starting to creep up, showing a divergence. You have the more recent acquirers still holding. And then really the unfortunate reality here, which I think is important to note, given what narrative is going to show up later on. You and I were both really optimistic about ordinals and runes and that sort of L2 narrative starting to show up on Bitcoin. Yeah. And the unfortunate reality, it's just not showing up. When we go ahead and we look at even liquid restaking tokens and sort of Bitcoin moving into those instruments, it's just kind of been slowly starting to leak out. We're not seeing essentially a new wave of entrants coming. And you can even see some of the older ones like Merlin. That was a popular one that showed a lot of promise early on, and we haven't seen much happening there. And this has resulted in fees being essentially depressed. I think just about 2 weeks ago, we saw fees starting to creep higher, and we said, oh, great. We could see if that continues and gains some momentum. That'd be a good sign. But on the 22nd, 23rd, 24th, we were starting to form some lows. And shortly after, let's see, the 23rd, 24th. There you go. Price kind of got soft right there.
Yeah. And it is disappointing to see because I know there's been a lot of good work. We've interviewed some of the people that are doing some of the work on the DEX side and the L2 side or the programmable side from the Arch Network to Saturn. So hopefully that can turn around. But I think, as you point out, the data right now suggests that just the traction isn't there. They're not getting the traction yet.
That is the unfortunate part. You see the solutions being built, and it's great that they're coming to Bitcoin because I also believe that it's pristine collateral. It's a great store of value asset. And being able to allow sort of these on-chain toolings to exist allows kind of more robust and more retail-facing solutions to eventually get built up as well once the UX improves. Like I remember, I forget how long ago this was now, but creating an ordinal was no easy task early on. And it was, approval, and it was just it wasn't a fun process.
Right.
And you did need to have a certain amount of knowledge base to go ahead and do it. And obviously, there's just not that many individuals across the globe that have that knowledge base to go ahead and kind of create ordinals. And now you have these L2 solutions. And so when you think of a user coming into the system, they might not understand what an L2 is. Why does this have like a W in front of it? Why does it have, this other prefix in front of it? Like, it's confusing. And it is a bit of, I don't want to say a turnoff, but it's just that knowledge gap. You can't expect your user to just traverse it within a couple hours.
Right. Yeah. And, if you think about friction, on one end, we have, outside of our space, you got the AI models and the interfaces that are coming there that are so easy and native. And then on the other end, we have the crypto solutions that seem to be just so difficult and have this steep learning curve. And that's the reality of the world. And especially like if Bitcoin is going to compete with these other solutions, the barrier to entry needs to be pretty low, or from a learning perspective and acquisition perspective.
Yes, and it's almost like it needs these primitives built out for actual solutions to even come to market that would go ahead and see these flows follow in as well over time. And not to mention, like, you're starting to see, and we'll get into this more later, but you actually see Trump through, his Trump-backed World Liberty Financial starting to go ahead and stake Ethereum through Lido and go ahead and use these sort of DeFi primitives. And then in addition, start acquiring, the protocols that enable some of these, lending solutions, for example, to go ahead and exist. And he's investing in it. Right? And there's a reason. And this is also what got Larry Fink excited. If anybody saw that interview at the World Economic Forum, I mean, I've never seen this guy so giddy and excited talking about the tokenization of bonds and stocks, and even allowing proxy voting taking place on chain. And he literally said public blockchain. That was, to me, extremely surprising, because anybody who's been in the space, for before 2018, 2017, I mean, actually, I think it was 2018 was that narrative where it was like blockchain, not Bitcoin.
Yeah.
And so this was just alluding to, because even before that, you had like, was it R3 Corda? I think was one example. And then you had JP Morgan leave R3 Corda, and then went ahead and forked Ethereum to create, starts with the Q, Quantum. I can't remember the name of it. They forked their own chain and started bringing their member banks on that chain and started experiment and come up with solutions. And then you even saw them starting to, like, some of their GitHub repos even has some like zero knowledge work way back when. And it was like, are they coming on the public blockchain, or are they going to stay in their sort of enterprise solutions? And for the longest time, I assumed that they would be in the enterprise world, and this would be a very permissioned financial experience that might not actually hit retail. And if retail were to engage with that financial system that was on a blockchain, it would be through the platform itself, and they might not necessarily know that whatever they're doing in terms of those baking solutions would actually be on a chain. So it was it felt like the solution that would be coming to retail from these banks would be very abstracted away from any sort of blockchain experience. And I don't think that's a bad thing. It's just, we're kind of in this world, at least for the crypto natives, that we see the benefits of kind of operating in this public permissionless landscape, because it just has such, greater ability to innovate, and, at a faster clip. So hearing, even I think Trump was talking about just like defining really like digital assets and blockchain. I forget his words here, but he literally stated, public blockchain. And that was encouraging of like, we can see the future direction coming.
Yeah, I think something was stated in the EO about it being open source software, right?
Yep.
And so, which kind of reveals the emperor's clothing on whether or not they're clothed, right? You can't really, no matter what you do, unless you're willing to publish the code, you can't really meet that standard. And of course, we know, I mean, so many of the tokens that we talk about today are public blockchains. The code is entirely open source. Some haven't gone that way. I think maybe it's Hedera is one that comes to mind. That is a private permission blockchain, and not just the ones that have been copied. But okay, well, I guess to kind of bring us back though here, we're kind of talking about this from an Ethereum perspective, or just the excitement coming in from a permission perspective. Like if we think about Bitcoin, yes, they're building some of the primitives to bring it. And it's exciting. We'll see if that actually materializes with some flows. But right now, it just hasn't materialized yet.
And it's not unique enough at the moment, right? Like there are better solutions even on other chains that are not EVM that, would be in terms of attracting new users in retail and even institutions at this point. That's not it. So what is it that's going to really bring this, outside of just kind of holding the asset for, a strategic reserve or a nation state? Like we're still sort of like got the blindfolds on and kind of trying to feel our way around to figure out what that is. And it's, as far as what we see with the flows regarding L2s and these solutions, it does not feel like that's it.
Yeah,
unfortunately.
And I would say I could see, depending on the guidance that comes out from the government, it's going to be interesting to see how wrapped assets taxation, does that change? Does it not? I mean, right now you can't really, even if you do a wrapped Bitcoin, it's a taxable transaction, right? Because it's effectively moving it, which has some implications and impacts how people are going to use those assets. If that perhaps went away, there was this idea of a like-kind kind of movement, you could see, really making it very difficult to keep capital on Bitcoin in that way, outside the people that are unwilling to try some of these other DeFi solutions. And then you've got the other side of it, which is that so much flows into ETFs, which if you're holding them at a brokerage, have other types of financing capabilities where this can be used on margin. So you've got other, the competitive landscape is going to be ever evolving. I'm hopeful. I like the projects, I like what they're doing, but we'll have to see if they actually materially attract the capital and maintain it.
Absolutely. And if anybody knows any projects that are starting to show themselves or get closer to rolling out a testnet or anything of the sort, please let us know. We'd love to talk about it and even talk about who's building it, just because we're eagerly awaiting and anxious for it.
Yeah. All right. So that's Bitcoin. Again, not seeing too much on that flow perspective from some of the demand from the ordinals side of it, the L2s. What else you got for us, Ben?
When it comes to Bitcoin, and to wrap up Bitcoin, this is really just a transition to kind of what I want to get into, which is something to do with what is like the greatest sort of selling point for Ethereum. And it's sort of this ability to take, an asset and digitize it and put it on chain, and then really allow it to interact with all these different financial primitives, right? And then create kind of these unique, building blocks, using Legos to create these composable solutions that are each in its way unique. If you like this protocol, go ahead, combine that protocol with this other solution and inform your own sort of unique stack to go ahead and bring it to market and send it out. Now, we'll get into that because I think Ethereum is getting ready to actually harness kind of one of its greatest selling points. Because if we go to a recent chart that came out, and it's this one, I forget, C.G. Rogan, I forget his his Twitter handle, but a lot of individuals on the timeline commented on this chart. And it's really just the number of unique crypto tokens that have been created over time. And you have Solana just dominating it, right? Thanks to Pump Fund making it, very low barrier to entry to spin up a token, a liquidity pool, and launch it out there. And we saw Base sort of start doing this as well. And then you have Ethereum way down here, just sort of non-existent. And that's despite back in 2018, you just had a ton of ERC20s coming to market in 2017. And it hasn't really done anything since. That's not really its greatest use case, right? Its greatest use case is, lots of liquidity on the chain, composable with all these different DeFi primitives that have been around for a long time now. It's, I don't want to say ossify in a negative way, but sort of becoming more battle tested and being more trusted is kind of how I talk about it. So knowing that, it's not about spinning up new tokens as its narrative, but it's more about using these DeFi primitives. And there's a recent project coming about, which, Marconi, what is kind of, when you think of Bitcoin, what is the entity that sort of garners the most attention when you think of Bitcoin?
MicroStrategy.
And Ethereum is coming up with their own on-chain version. So I don't know if you saw this, but it looks like it's gaining a lot of interest, but it's EtherStrategy. And so it operates in a similar way where it goes ahead and issues bonds, and people can go ahead and buy these bonds with USDC tokens. And that allows an individual to go ahead and kind of redeem it, at maturity for essentially the same USDC value, I believe. And then they can also go ahead and instead redeem the shares of this, I guess you call it vault, I believe. If I'm mistaken, please somebody correct me, but it's got just the similar sort of kind of operating premise that exists with MicroStrategy, right? And there's been 40,000 ETH that has been shown as being interested in being sort of these early users to it. So it's coming soon, very soon. I don't know if there's a date, but I do believe they're sort of capped. And if it does gain traction, I wouldn't be surprised to see a lot of attention coming here. But what it's really highlighting is, look, this is essentially on chain, right? They're being able to go ahead and issue out these sort of debt instruments, and you can go ahead and then redeem a share of something that exists also on chain. And you can see the backing of that capital there. You don't have to rely upon quarterly filings, right? This is sort of like we are harnessing kind of public permissionless blockchains here to come up with innovative kind of financial solutions. So this is what I mean, that it's like starting to harness really what it's all about. And I say that because the Ethereum Foundation for, the past couple of years, and I believe this is kind of one of those issues that a lot of individuals kind of hate, I would say, is like we need to build solutions that are very kind of philanthropic in nature, right? And I'm not saying I don't like philanthropic, projects or anything. I just don't think Ethereum, that is its greatest use case right now. I think its greatest use case is something we're seeing like EtherStrategy. Because the question is, how can you do this, right? It's sort of like this gateway drug into what are all these toolings? How is this possible? How can it all sit on chain? How is there really nobody in the middle? And I'm kind of making some assumptions here because I just read like the first few blocks here of this, this GitHub page, but it really just opens that door up to have that conversation. And then you sort of see the uniqueness kind of shine. So will this be successful? That's a completely different conversation, right? I don't think it's going to be as successful as MicroStrategy, mostly because I think the individuals building this, and they probably do know this, I'm not saying they don't, but it's just the options market had such importance when it came to MicroStrategy. and the ability essentially to harness volatility and create sort of like this derivative yield product off of MicroStrategy's success, that can't be understated. Right. And I don't see it yet. That doesn't mean they won't create this at some point, but as of yet, it doesn't seem like they're going to have that kind of secondary market exist that would go ahead and sort of kind of juice the appeal of EtherStrategy as a product. But it's great to see. It's exciting to see. And it's only one of really the two things I was going to hit on when I'm talking about sort of ETH harnessing this financialization of itself.
Well, this is an interesting take because we have a couple of questions here in the chat I thought I'd bring up because I think they relate to Ethereum, they relate to alt season. So just kind of recap here. I think there's an interesting thesis that's forming that I'm not sure. I mean, I know a lot of people talk about the way they see Ethereum as a network, but the way you framed it as sort of this financial ecosystem that allows you to digitize assets and then access an array of primitives, financial primitives. I haven't quite heard it that way, and I think it's actually a really nice way. And part of that, I think, is the challenge that Ethereum continues to have, because that's a far cry from the people who say it's the world's computer or it's the world's app store. Because when we talk about it being more of just a financial app, that niches down, but it obviously it unlocks a lot of value, because then you just think about, well, that's where I need to go for those types of services versus launching tokens. Which gets into sort of this other type of play that's in the market. But let me bring in a couple of questions here from the audience, because I think you may be able to opine on that, and maybe it's a good dovetail into some of the stuff we've been talking about. One of the questions was kind of asking, is there still going to be an alt season? Or did the Trump token kill the alt season? I want to just put something out there. Yesterday, I was looking at sort of the last couple of cycles. I feel like we're still on a 4-year cycle every time, and people assume it's gone. But if I looked at sort of when everything kind of ran, it really is kind of the October, November, December, January timeframe where you see a pattern of not that you can't see a run up before then, but that's really the thrust of it. So just to bring it back, so you're saying you still expect an alt season of some kind to happen?
Absolutely.
Okay.
Like 110%. I don't understand this whole discussion that the cycle's over. Really? The cycle's over? You just had like the most impactful moment just happened to crypto, where like the regulatory landscape, it was in this full suppression mode. And it wasn't like the suppression was let go and just removed. No, it completely reversed into being one that is like supporting.
Yeah.
This only happens one time for such an industry, one time in its entire existence. And we're debating whether we're done. Like, okay, enough with the views, enough with the clicks. Can we just, stop that game for a minute and be real, everybody, please? Like, it's not over.
Right.
Okay,
yeah.
We're just getting started.
Where I think people are amplifying these narratives and they're being victims of the attention economy. StataTrader had a lot of really in-depth questions. I'm not sure, StataTrader, we're going to be able to get to all these. One of them was about hedge fund activity and leverage option positions. And actually, StataTrader, I think you're joining the conversation a little bit later. If you listen to the first part, Benjamin actually touched on the fact that he sees hedge funds winding down a little bit. So that may be something you want to listen to, hear his perspective on that. I think he's got a good finger on the pulse there. But basically, they're not borrowing as much money. They're not looking at the market the same way, and they're seeing a bit of a cool down. He has another question here about the expectation in terms on the trigger point when the Fed will slow and stop QT. Ben, I'm not sure if you've got a perspective. I would probably say we can come back to that at a later date, because we're not covering as much of the macro right now, just by virtue of what we've chose to focus on. But just wanted to share that has been a question. The third one, though, I think is one that maybe you can get into a little bit more, and it leads to flow. So it says for the Athena stablecoin yield, can you explain how a yield is being generated? Anything to do with funding rates? What are the risks of the Athena stablecoin product? Is there anything you'd want to share there?
Yeah, a lot of good questions. Regarding the second one on the Fed, real quick, there was a macro cycles espresso essay, part 3, I believe. I think it was part 3. Might have been part 2. Where it kind of got into the historical ebb and flow of interest rates. And I think it's just important to zoom out a little bit because everyone says 70s were really high and then we came on down. But before the 70s, it was like a constant rise. And, back in the 30s, 40s, it was very low. Well, if you keep going further back, they were high, right? Like it has its own cyclical nature to it. And the point there was that in that essay was we should be entering this period of sort of higher lows and higher highs for interest rates. And will that go ahead and curtail a lot of the debt that exists out in the world? Or are we entering sort of this amazing period of innovation and sort of growth? Or was the Industrial Revolution 3.0, 4.0, whatever we're on now? I don't know. But, we're
it's still 2.
we're still on the second one? Okay.
Yeah.
All right, I guess I'm getting ahead of myself there. But, that would almost anticipate that would need to happen to go ahead for sort of this margin to even exist with these higher rates. So it kind of all has this cyclical pattern to it. So if that is the premise, like just this morning, I saw that the 1-month treasury was starting to inch higher. Given the recent sell-off on the AI, you saw a lot of money flowing into long duration treasuries as well. So those yields started to drop. It's a good sign, and the dollar didn't even budge. So it wasn't like a risk off per se, and everybody's moving quickly into the dollar. It was just more of like, maybe we should lock in some yield right now. It's a little bit of a safer instrument, but it was more on the longer term. So it's showcasing there's some demand there, and there's an expectation, if that's the case, that yields might sort of remain in this elevated state for longer. And so we should not expect it to be too much lower, in my opinion. I know the dot plot says what it says, but I wouldn't be as focused on the macro anymore. Like the whole Japanese and the yen carry trade recently, and the Fed decision there, like you didn't see much of a hiccup spill over, right? You're not seeing a lot of discussions on the repo or secured overnight financing rates anymore. And there's a reason for that. It's not as relevant at the moment to market. So just keep that in mind. It's in part why I don't really talk about it that much. Like it's not making these movements of late.
I was going to say, Arthur Hayes, I think, penned another essay about expecting a pretty sharp correction down in the 70s. And having read some of his pieces, I think he's still talking a lot and putting a lot of emphasis on those kinds of vehicles. Curious to see if that plays out.
Hasn't he been bearish for like this existential crisis in the markets for the last 6 months or?
Oh, I want to say longer than that. Which
clicks.
Yeah. And I like his writing. I find some of the analysis interesting, but doesn't necessarily mean it's going to play out. What's the most accurate model is the real question. What's the best predictor? I am also curious, and I don't think we have the time to really get into this yet, but this idea, I think Bessent was just confirmed as the Secretary of Treasury, and I saw a note, and I believe it was from him, saying he wants to bring in prosperity and a lot of things, but one of them was bringing back gold, almost a gold standard. And what, we talk about higher rates. One of the reasons that so many countries and governments were excited to get off of any kind of hard asset standard was credit creation was so much easier without it.
Right.
And so the idea that if we go back there, yes, we could potentially address our debt, but certainly credit is going to be more expensive. And how that plays out, if maybe it's paired, as you said, with a technological innovation where we're seeing rapid deployment of new technologies, which at this point everyone assumes has to be artificial intelligence because atoms don't move. Development of atoms doesn't move at the space of virtual software, at the speed rather. We've got to see that, but I mean that's a big if. That's a big if. But I would think keep rates higher for longer.
Yeah, I don't hear Zoltan in Bretton Woods 3 come up much anymore. Anybody who's listening, you go ahead, take that, run with it, and start talking about it somewhere. But he was really of the opinion of what we're seeing right now, which is sort of almost making it a state mandate to like own these commodities of production. That was sort of his premise. And a lot of this in capital that will be invested are going to go to these things. And that's going to sort of be viewed as the portfolio of sort of a country, its people, its manufacturing, and its outputs, and eventually its GDP. And we're seeing that a complete move on AI happening right now. And I keep getting ahead of myself here, but that right there, it's getting ready to happen to crypto. So you can call it the Bretton Three Woods thesis. Crypto is now coming into the limelight thanks to what you're seeing it right now. Just you're hearing it percolate. You see Larry Fink getting completely giddy over the margins that are going to hit BlackRock when they go ahead and embrace public permissionless blockchains.
Yeah.
Okay, that is incredible to hear. Like he actually sees, he's looking at his balance sheets. He's looking at the expenses that have to exist to go ahead and do a shareholder vote. If anybody's owned shares of something, you've gotten all these pieces of paper in the mail and they're asking you to go and vote. How many people actually go ahead and vote? Not that many, right? But now he sees this as being able to essentially outsource all that paperwork and sort of basically just hit your app on your phone and say, well, how do you want to vote? Yay or nay? Okay, so postage stamp costs just went down, paperwork just went down, the ink just went down, the person actually going ahead and processing all the mailing that comes back has just gone down, and then the individual filing it with the SEC to prove that the vote was what the vote was, and then auditing all that. Like, that's a lot of money.
That's a lot of money, but you can also see the power of being able to influence those decisions in mass using tools of persuasion like X or TikTok or whatever, right? It creates a whole new design space for that.
It does. That's a good point. I don't want to think about that, but really getting into the margins discussion, right? Yeah. Interest rates are going to be higher, so there has to be some sort of ability to capture additional margin to go ahead and pay back on those loans. And if Larry Fink sees the possibility to go ahead and shrink the amount of expenses on his balance sheet using this technology, well, there's one, right? We're not even discussing AI in that part right there. He sees the reduction in cost, so he can go ahead and borrow capital at a higher premium, right? And that's sort of this kind of golden era of innovation. I think a few individuals, I think Zuckerberg said that recently as well, but that's what they're alluding to, right? And that from a Fed perspective, they can go ahead and keep the rates going up higher. And the economy can be okay because you are entering into this period where the amount of the costs and the expenses month to month just get drastically cut. So you can go ahead and make that margin and pay back those loans.
I like that. I would also say for everyone listening, go read back up on reflexivity and the way George Soros defines it, because one of the key parts of that, everyone talks about it from a trade, and they talk about generally that people FOMO into a trade, but he talks about the fact that when there is a new change, a new dynamic, and it creates this new idea that you can that old rules no longer apply, and that now you have this new paradigm that obliterates those old rules, and then it allows it the room to grow, and then you just have people buy into that. So when you have someone like Larry Fink coming out with this idea that we have this new paradigm of digitalization assets, and you do have a lot of people saying, no, that's not true, it doesn't change anything, but it's something worth studying and keeping an eye on, because especially those of us who've been in the space a long time, but if it starts to gain traction, you start to see that language shared across more leaders, that's a sign that one of the largest bubbles probably in recent history could be forming. Not because the assets underlying aren't good or that they can't actually deliver, but that the way that the market is going to move. So definitely something that I think that we should continue. I mean, one of the reasons we do the flow report, I guess every week, right, is to kind of see where the flows are going. But this could be a tremendous signal for something that's going to blow up.
And to look at the flows, relative to that kind of topic that we just hit on, this is World Liberty Financial Holdings in the various assets denominated in US dollars.
Mhm.
It is going in one direction, up and to the right. And it's not just holding one specific asset, right? It's a portfolio of assets. And the portfolio of assets, if you think of it as the Bretton Woods thesis of trying to diversify sort of the portfolio of holdings that were going to be strategic to whatever initiative your country is pushing, I don't know what other chart to show.
Mhm.
Like this is showing that thesis starting to play out. And when his discussion of a strategic reserve shows up, and I do believe that he was, not thoughtful, but just thinking in general. Like this wasn't just a mistake, but it was a strategic reserve. Like it alludes to the fact that it's going to be more assets than just one.
Mhm.
Okay. And if there's that strategic reserve, that is that Bretton Woods 3 thesis that is coming to limelight here, and it's showing itself in crypto. And that's pretty powerful right then and there. And the fact that single regulatory official essentially in a position of power is pro crypto, pro innovation, right? This agenda is set and they're moving. This is the forest. Please don't look at the tree.
Mhm.
It's just one tree, and it's probably at the fringe of the forest. So it's not as healthy as the other ones. All
Yeah. Yeah.
So-
Maybe get off whatever social you're on and just listen to the show. I think that was one of the pieces of advice I had in one of my recent videos. Okay, well, so I think we've answered the one question around from a macro perspective. What about from the Athena perspective? And I think there's one last point you wanted to make of some data.
Yeah, what was the Athena again? It had to
Let me
do
go
with
back to that. And Straw Trader, I'm not sure if you saw, but we did release a video on Friday, which was me going over some of the points that Ben had made around Athena. So that may be something worth checking out. But he said for the Athena stablecoin yield, can you explain how the yield is being generated? Anything to do with funding rates? And what are the risks of the Athena stablecoin product? So kind of 3 questions in one.
Okay. It's a synthetic dollar. It's really just a structured product that one share is $1. So that's how they value it as. That product is basically harvesting yield. And there's 2 ways in which they can harvest yield. One is through holding staked ETH. So there's about 3% yield there. Nothing that's crazy and to write home about. But the other one is funding rates, and funding rates have been declining. And I kind of pulled up on my chart here the current yield markets for staked USDE on Pendle. I know that's probably confusing, but it's just basically a rate that which the market thinks that instrument is going to be yielding day to day. And just over the past few days, it's been
Yeah,
done.
I was going to say, if you could kind of point to, there's a lot of data on the chart, what you're looking at.
There is. We can ignore the bottom half because that's a different instrument. But these are, let's see, we have a February expiry, a March expiry, and a May expiry. The May is in blue and green is March. And I will share this in the chat. And if you guys are using Panda yourself at this moment, you can go ahead and you pull up studies. And it's at the moment, we're going to clean this up, but I know it's a little messy, but you can type in swap rate. And you can go ahead and click swap rate and you'll get just a default instrument to show up, but you can go ahead and right now we just have Ethereum, Bitcoin, and stables. So you can pull up stables. You can check the chain. I think we just have Ethereum right now. The protocol that we're looking at the rates on are Pendle. And then you can go ahead and select your instrument and you can find the staked USDE products. Looks like about halfway down the list, March, May, are the ones I'm talking about. And then go ahead and add that to your charts. So let me get that out of there. So it's all right. And so you can see they are on the decline of late. That's just because funding rates in general, I believe Benjamin was talking about that earlier. They've been coming down. And it's reflecting in this market as well. What are the risks to it? a lot of these coins sit in custodial solutions. The custodians seem like they're very reputable. I think one's Copper, another's Kobo. I forget the other one. And they try to do auditing of them, but it is a centralized exchange product that does use on-chain tooling to really issue that synthetic stablecoin. And so if you stake that stablecoin, you can go ahead and earn the yield that's being earned in these funding rates that exist across the exchanges that they use. I believe like 60% is in Bitcoin and about 40% in Ethereum, and then just carve out a little percent here and there for Solana. Those are the main assets that are being used. And so once the funding rates start to rise, they go ahead, they take that 1x short position, which sort of just locks in the value of that ETH at the time in which that position is initiated. If it's, say, 3,100, as we see right now, they go ahead and take that 1x short, and you basically lock in 3,100 at that time. Price can go to 10,000. It's not going to liquidate you, right? When you go ahead and you undo that position, you have $3,100 worth of Ethereum value at the end. And so while you're sitting in that 1x short position and the funding rate is positive, then that funding rate gets sent over to the individual on the short side. And so that's how they collect the funding, and then they pass it along to those that stake USDE, which means the more ETH, USDC, USDT, the more money that in capital that flows into this instrument, right, the more 1x shorts, and essentially the more selling that's happening with ETH. And we have February, March, and May. Those are essentially the three dominant instruments that currently exist on Pendle. One of them, I believe, has, I think combined, they're over about $250 million of capital in these three instruments. Definitely rounding there, so please don't correct me too harshly. But that's a lot, right? Like that's a lot of money that's flowing into these Pendle instruments, and it's just funny because Athena is one of the greatest success stories, and so is Pendle. Yet, one of the greatest use cases right now on those are 1x shorting ETH, which it is what it is.
Yeah, it's a victim of its own success.
Greatest risk right now for those instruments. It's just, how much auditing is happening, how much clarity can you actually get on those holdings? I know they're trying their best to go ahead and do that. They must have been, up to par, up to snuff here if BlackRock went ahead and started, building products with them. I think that's a good sign. Granted, FTX had some great relationships as well. But at some point, you do want this on chain, right? You do want it more on chain just so you can see it a little bit more clear. Even looking at like the flows of assets into centralized exchange wallets. I had some people kind of message me and saying, "Oh, do you want like greater clarity, or do you want that?" And I, replied to some of them, and at the end of the day, nobody really knows, right? Like I'm getting different answers from everybody, but everybody believes their own data, which I fall victim of that as well. That's Athena. That's the instrument, synthetic dollars. It needs to be on chain more. They can't really do that right now, and the yields have been dropping.
Yeah. All right. I think that's a really really good summary in answering those questions. Okay. So let's bring it back to where we were going with Ethereum. Now I'm trying to. I think there was one other point you were trying to look at, if I'm not mistaken, because
yes,
was there something else? Yeah,
I kind of went into the Trump stuff already, so I don't really need to get into that. But the last point on sort of, I said 3 points. The first one was Bitcoin flows, and we're just sort of underwhelming on the solutions coming. The second one is ETH harnessing financialization. And you can really see that with EtherStrategy showing up. And I didn't really get into it. I'll touch on it quickly, but you're seeing retail-oriented strategies come now that is actually embracing on-chain like lending protocols. for example, there's a credit card that's, I think EtherFi is building it, where they go ahead and like set up these revolving credit instruments. I think they're using Aave. I might be mistaken. But this is an on-chain solution here to go ahead and create credit for an individual to spend a card, in the real world. And when they go ahead and make that swipe, they're borrowing, right? And maybe it's a 30-day window, similar to a credit card. You hit the statement. If it rolls over, then you got to pay interest on it. That's great, right? That's impressive, right? Because now when you think of it as, somebody from a banking side to go ahead and make those statements again and, keep track of, how many loans are outstanding and, what's everybody's credit score and the capital associated with them. Like, you can go ahead and abstract a lot of that way, reduce your costs, and we're in the golden era of financialization and innovation again. So I know people don't talk about credit cards because really to date, it's kind of been lackluster with those solutions. It's always been like you top it up and then you can go ahead and spend in the real world. It's like, well, this isn't really that cool. Like I can just go ahead and, off ramp somewhere and put it in my account and move on. Right. And I think once we start to see these retail oriented solutions like a credit card show up and then combine that with like a savings account on chain and really being able to do like portfolio allocations. And now you see like the whole snapshot of your account, right? That is embracing financialization. And so ETH really just becomes this ground of like, you need to go ahead and pay compute to go ahead and, change the ledger, right? And change the tracking of where assets are on chain. ETH as money, as compute really has a strong property. And I think as it harnesses this financialization, you're going to see that narrative show up and mean a lot. So, sorry, that was point 2, and point 3 was Trump and what's going on with the regulations. There's a complete shift happening. And the last point I was going to hit on is he's got this big push on AI. And I don't think people realize how this impacts something like an EVM chain. So I'm not being specific on Ethereum, but there's so much code out there when it comes to EVM and building smart contracts that the cost to audit is going to go from hundreds of thousands in token allocations down to maybe 10 to 20,000, right? To go ahead and start a project and push it out. So we saw the cost, the barrier to entry to create a token liquidity pool drastically drop. Solana went ahead and they went and just issued tokens like no tomorrow in this chart. And I think I just changed it, but it's that chart where you see the amount of new tokens being issued over time.
Right.
Solana chart just exploding. I think you're going to see the amount of smart contracts that hit these EVM chains explode in the next year as these new AI solutions and this AI push happens in the embrace of crypto. So I feel like I'm on a soapbox. I'll try to get off of it, but that's just the reality of it, what's happening here. And just a lot of this is going to push into altcoins as well. It's just going to be a slower cycle, right? We have all these new financial instruments that are sort of going to reduce any kind of euphoric conditions to the upside. So you're not going to have these massive blow off tops in the large caps. But just like we saw in 2024 and I think even 23, like there was a quick shift to sort of baskets and these narratives and these small cap tokens. I think you'll still continue to see that because you're not going to see as much of a push higher in these larger cap assets because there's so many different ways that yield is getting harvested that suppresses that volatility to the upside and creates these sort of extended periods of just boringness. So
it's going to dull the market into submission.
There'll still be excitement. For sure.
All right. Well, man, that's a lot to chew on this week. A lot of really interesting aspects. And certainly, I don't know, for me, kind of sitting on the sidelines thinking from an investor standpoint, the excitement that's going to happen. I mean, there's a lot to really be excited about for the rest of the year. Even if flows or price and sentiments surely are not moving in the right direction or a direction you can enjoy, it's definitely exciting to think about what could happen. So I'm pumped.
Yeah, flows suck right now, but watch that CB premium. I'd say that's the takeaway, and then everything we talked about would be coming down the road.
Okay. Well, perfect. Well, I think with that, we are going to wrap up this week's show. I want to thank everyone for joining us. Ben, Lily, thank you for dropping by, dropping the latest version of the Flow Report. Look forward to hearing what you bring back next week. And for all those who joined us, appreciate all the questions that you bring to us. Definitely check us out on X. Obviously, if you want to get some stuff midweek, you can join the Panda chat, where there's a lot of really good knowledge sharing about specific metrics and sharing data, and as well as using that tool. So that's definitely a good place to do that. And if you got questions or ideas, let us know in the chat. We'll see what we can do to incorporate that into the next episode. Definitely keep some dry powder, because it sounds like there's going to be some great opportunities in the future. This is Marconi White signing off.